Bitcoin did not move randomly today, and it was not retail traders driving the price. There is one data point that now explains most short-term Bitcoin moves, and almost nobody understands it correctly. Over the past few months, Bitcoin price action has changed. The old rules do not fully apply anymore. Instead of reacting only to news, hype, or social media noise, Bitcoin is now responding to something much more structured. Bitcoin ETF inflows and outflows have become one of the strongest short-term signals in the market. Not because they predict price, but because they explain demand in real time. In this video, I'm going to break down what ETF inflows and outflows actually mean, why they matter now more than ever, and how investors should use this data without falling into false assumptions. By the end, you will understand why Bitcoin moves the way it does, even when nothing else seems to change. Why Bitcoin price is now tied to ETF data? For years, Bitcoin price was driven mostly by retail behavior. People bought on exchanges. People sold on exchanges. Sentiment moved fast and often irrationally. That has changed. Bitcoin ETFs opened the door for large pools of capital to gain exposure without touching crypto exchanges. Pension funds, asset managers, and institutions now participate through ETFs. This matters because institutional money moves differently than retail money. It is slower, larger, and more deliberate. When this money flows in or out, it leaves a clear footprint. That footprint shows up as ETF inflows and outflows. When people ask why Bitcoin moved today, the answer is often sitting in ETF flow data. What ETF inflows and outflows mean in simple terms, ETF inflows mean more money is entering Bitcoin ETFs than leaving them. That means ETF providers must buy Bitcoin to back those shares. ETF outflows mean investors are pulling money out. That forces selling pressure behind the scenes. This is not speculation. It is mechanical. When inflows are strong, demand increases. When outflows dominate, pressure builds. The key point is this: ETF flows show what large investors are doing right now, not what they say they believe. That is why price often reacts even when headlines are quiet. Institutional demand versus retail buying. Retail buying is emotional. It reacts to price moves after they happen. It chases green candles and panics during red ones. Institutional demand behaves differently. It allocates capital based on models, risk rules, and portfolio balance. ETF inflows often increase when volatility drops and confidence improves. Retail buying often increases when price is already moving. This creates a gap between what the chart shows and what the market is actually doing underneath. ETF flow data helps bridge that gap. It shows whether real demand is supporting the move or if price is drifting on low conviction. Recent examples of ETF flows moving price. We have seen multiple sessions where Bitcoin price rose while retail interest stayed flat. In those cases, ETF inflows were positive. We have also seen sharp pullbacks that confuse traders. No major news. No panic. But ETF outflows increased. This pattern repeats often. Price follows flows, not headlines. That does not mean ETFs control Bitcoin completely, but they now play a meaningful role in short-term direction. Ignoring them means missing a major part of the picture. What ETF data can and cannot tell investors. ETF flow data is not a crystal ball. It does not predict tops or bottoms. It tells you what is happening now. Positive inflows do not guarantee higher prices tomorrow. Negative outflows do not guarantee crashes. ETF data works best as context. It helps explain why price behaves the way it does. It helps investors avoid emotional reactions to random movement. Used correctly, it adds clarity. Used incorrectly, it creates false confidence. Bitcoin ETF inflows and outflows are now a core part of market structure. They reflect institutional demand in real time. They explain short-term price behavior better than most headlines. But they should never be used alone. Smart investors combine ETF data with patience and discipline. They use it to understand the present, not predict the future. Context beats prediction every time. If this helped you understand Bitcoin price action more clearly, subscribe for calm, no-hype crypto analysis. And comment below if you want to follow up on how ETF flows affect altcoins. Thanks for watching. I will see you in the next one.